let's not forget, Microsoft and Google are still gaining share from AWS, which is the biggest hyperscaler. And they're growing enormous businesses at nearly 30%, 31% last quarter, 29% this quarter. These are spectacular growth rates for a business this big, this important, this entrenched. The expectations coming into the quarter was that they would accelerate this quarter. And again, that's where the little bit of a disappointment was before we heard that we'll get right back to an accelerating growth rate in the second half of the year. And importantly for Microsoft, the growth is coming from AI-type services that are bringing with them other types of growth. So they talked about the fact that when somebody comes to them and tries to rent GPUs to do their training and inferencing for AI, Microsoft is able to sell them other products, data fabric and storage and business intelligence products. And then those same enterprises are upgrading their Office products to the higher tiers to get Copilot functionality. So that's still the story for Microsoft, is that AI is the tip of the spear. They have a big lead there, but they're leveraging that to grow beyond that. And as long as that's the case, Microsoft will be just fine.
Okay, Gil, it's Sam here. I mean, beating on most metrics except for arguably the part that the market really cares about, as you and Tanvir have just been highlighting, of course. What is this really telling us, though? And, you know, sort of broadening it out to the rest of the earnings theme as well, if you wish, but about investor sensitivity right now, because the capex arguably looked quite encouraging. Is this a story of investors not being really convinced about the sort of big picture intact, or, you know, proof in the pudding of where that spend is going to go?
Well, the background to your point is obviously the great rotation that we've witnessed over the last few days from the mega cap technology companies to the rest of the market. So although expectations were very high even a few days ago, they were a little lower coming into these results because folks are starting to be concerned about whether there's continuity in the AI boom, in continuity in the capex. And if we were to just take that as a takeaway from Microsoft's earnings and commentary, they're still seeing demand signals. They use that term. They're still hearing from their customers that they want more AI. And as long as they hear that, they will build more data centers, which is why they're spending so much on capex right now. They're spending so much that they had to go into an explanation of, well, half of the spend is on land and financing leases. Only half of the spend is on servers that we're going to depreciate quickly. But still, the investment is huge, which tells you they're still hearing there's a lot of demand out there for AI services. That's good for the rest of the ecosystem. Whether that lasts for more than 3, 6, 9 months, that's to be seen, because the levels of spend that they're currently engaged in, them, Google, Amazon, are not sustainable. They can't keep spending at these levels forever. So as long as they're hearing from their customers that they're willing to spend on generative AI, they'll keep doing that. They'll keep putting more capex into the ground, more data centers, more GPUs.